Right. So we've crossed 100 pages of the booklet on the case scenario, right? So 1 to 21 case studies, MCQs already discussed, और अब हम चलते हैं towards case scenario 22 to 28 और 27 और फिर उसके बाद 29 to 35 and so, okay, right? So 22 to 28 in this particular series, okay, right? तो कितना मतलब ऐसे होना चाहिए ना कि सारे चैप्टर्स कवर किए, कि सिर्फ स्टैंडर्ड्स एथिक्स की माला नहीं जपनी है, कि आपको बैंक ऑडिट, एनबीएफसी ऑडिट, ड्यू डिलिजेंस, इन्वेस्टिगेशन, फॉरेंसिक अकाउंटिंग है, इंटरनल ऑडिट है, ये बाकी चैप्टर्स भी आपको ठीक से करना होगा, ओके, राइट। तो यस, सीए मुनीश इज कंडक्टिंग द ऑडिट ऑफ मिक्सर लिमिटेड. He is the auditor of the company since last 3 years and has found nothing unusual in the operations and financial statements of the company. The company has many locations where substantial inventories are stored and lying. During his 4th year stint, he finds that inventory quantities have risen disproportionately as compared to the past few year trends. He has assessed the existence of RMM due to fraud. The company has revenue of 580 crore during the year. He has deeply verified all the aspects related to the revenue recognition of the company and has concluded that there is no RMM due to fraud related to revenue recognition. During audit, it has come to his knowledge that company is also required to install online air pollution control monitoring system in its plant as mandated in the state pollution control legislation and regulation. Non-installation of such online pollution control monitoring systems may lead to fines and even sealing of the plants. While verifying the payroll data of the company, it has come to his notice that provisions of law preventing employment of the child labor are not being adhered to, and the company is employing child labor in flagrant violation of the rules in this regard. The company also exports part of its turnover, and matters have gone unnoticed in compliance audit carried out by agencies of the overseas buyers. Based on the above facts, please उत्तर दीजिए और marks लीजिए. Okay, right? So substantial inventories of the company, they are lying at many locations, right? So this is regarding inventory. So SA 501, right? Then assess the RMM due to fraud. So that could be SA 240. Then revenue is 580 crore, deeply verified various aspects and concluded that there is no RMM due to fraud due to revenue recognition. As such, SA 240 says that you have to go by a presumption, then a presumed fraud risk in revenue recognition. But here they are rebutting that presumption. So that rebutting of the presumption has to be documented. Then it says again, company is required to install the online pollution control monitoring system and non-installation, right? So that is again a non-compliance with the other laws and regulations. Then company has also employed the child labor in flagrant violation of the laws, right? So that is again SA 250. With respect to the auditor's conclusion relating to the RMM due to fraud related to revenue recognition, which of the following statement is most appropriate in this regard? The auditor needs to document the reason for arriving at the conclusion that there is no RMM due to fraud related to revenue recognition. Identify and assess the RMM due to fraud needs to be documented. Since no RMM due to fraud pertaining to revenue recognition was identified, separate documentation in this respect is not needed. So this option is not needed. Auditor needs to only document that no RMM due to fraud related to revenue recognition was identified. That means no reasons are to be documented. No, you also need to document the reason. Auditor needs to give the reference to the discussion among the engagement team members to document that no RMM due to fraud related to revenue recognition was identified. No such discussion of engagement team is to be referred to. So what does it say? The audit document the reason for arriving at the conclusion that no RMM due to fraud related to the revenue recognition. Okay, right. Considering the auditor's findings related to inventory counting, which of the following is not likely to be an appropriate response to be outlined is to the outlined assessed RMM due to fraud, which is not likely to be an uchit response, appropriate response. Observing the inventory counting at all the locations at the same date by employing the necessary resources. Okay, observing the inventory count at certain locations after prior intimation, more rigorous examination of the packed items during observing the inventory count process because it may be empty boxes, observing the inventory count at the end end of the reporting period, so at the cutoff date, to minimize the risk of manipulation. So which of the following is not likely to be an appropriate response? So observing the inventory count at all location, appropriate response. More rigorous examination of packed items, appropriate response. Counting at the reporting date, yes, appropriate response. But certain location, and that too saying I am coming after prior intimation, it says no, this is not a good response. Okay, next one. Which of the following statement most appropriately describes the responsibility of the auditor in relation to compliance with the state pollution control legislation and regulation? Sufficient appropriate evidence needs to be obtained. This is other laws and regulation. For direct effect laws and regulation, we need to obtain sufficient appropriate evidence. Physical verification of the workability of the system is required from an auditor. Only inquiry of the company management personnel and the review of the correspondence with the regulatory authorities are suffice to verify compliance. Only physical verification of the workability of the system and review of correspondence with the regulatory authorities are suffice to verify the compliance. So physical verification of workability of system, we don't like this point. Sufficient appropriate evidence is required for the direct effect laws and regulation. For the other laws and regulations, what we need to do? We need to do the inquiries of the management and inspect the correspondence with the regulatory authority. Right, so go to the case studies of SA 250, look at the audit procedures to check compliance with the laws and regulations over there. Right, then with respect to the auditor's observation relating to the matter of the child labor, which is the most appropriate course of action which needs to be performed by him in this matter. Right, so this is the question regarding the procedures to check the compliance with the laws and regulation. Now the question is regarding the procedure when a non-compliance has been identified or suspected with the law regulation. So he should obtain further information to evaluate the possible effect. He must report the matter to the concerned government department. He should obtain further information to evaluate the possible effect. Besides, he should also evaluate the implications of the non-compliance for the audit risk assessment. He should express a modified opinion in the audit report. You can't be such an extremist, right? So he should obtain the further information to evaluate the possible effect on the financial statements. You should also evaluate the implications for the non-compliance on the audit risk assessment. Which of the following statement is most appropriate about documentation of non-compliance with the laws and regulations by an auditor in the context of 250? Instances of identified non-compliance need to be documented. Instances of suspected non-compliance need to be documented. Instances of non-compliance with law regulation finally determined by court of law needs to be documented, and instances of identified as well as suspected non-compliance with laws and regulation needs to be documented. Okay, right, so all inclusive, that is good. Identified, suspected, both needs to be documented. Okay, right, so when the auditor concludes that the presumption that there is RMM due to fraud in revenue recognition is not applicable, auditor will document the reasons for that conclusion. Right, then due to fraud, observing inventory count at certain location after prior intimation is not likely to be an appropriate response. Right, then what does it say? SA 250 for the other laws and regulation, inquiries of the management and inspecting correspondence with the regulatory authority. Okay, right, then when auditor has identified a non-compliance with the law regulation, number one, understand the nature of the act. Second, understand the possible effect and the implications of the non-compliance on the other aspects of audit, including the auditor's risk assessment, reliability of written representation, and accordingly take the appropriate action. Right, and as per 250, auditor has to document both the identified and the suspected non-compliance with the laws and regulation. So such a marvelous piece of preparation for the exams you were missing out if you did not study this 177 pages document issued by ICAI. And kitna amazing content hai iske andar. Okay, right, now coming to case scenario 23. You are the auditor of Motors Limited, a listed company specializing in manufacturing components for electric vehicle. और जो स्टूडेंट्स को ऐसा लगता है कि हाँ मैम ने इंग्लिश में या हिंदी में पढ़ाना चाहिए, अब इसमें तो मैं क्या ही हिंदी बोलूँ, ये तो द कंपनी हैज एक्सपीरियंस है ना, कंपनी को ऐसा है ना अनुभव हुआ है कि उनका रीसेंट ग्रोथ है ना बड़ा तेजी से ग्रोथ हुआ है पिछले कुछ सालों में, क्योंकि उनके इलेक्ट्रिक व्हीकल की डिमांड बढ़ चुकी है. वैसा मैं यार डबिंग तो नहीं करने बैठी हूँ. ओके राइट, द ट्रांसलेशन नहीं करना है. द इंडस्ट्री इज हाईली कॉम्पिटिटिव विद सेवरल न्यू एंट्रेंट्स एंड रैपिड टेक्नोलॉजिकल एडवांसमेंट्स. Revenue for the year 24 declined by 15% compared to the previous year. Company reported a net loss of 10 crore for the year 24. Company's current liability exceed its current asset by 25 crore on 24. Company debt equity ratio increased from 1.2 to 1.8 during 24. Management has acknowledged the challenges that are present in the market condition, but has expressed confidence in the company's ability to secure the new contract and bring the company profitability back in the next financial year. So there is a going concern issue, and it says management has a survival strategy. U-turn. Okay. Management prepared a cash flow forecast for the next 12 months, which provided that the company will need additional financing of 30 crore to meet its obligation. Management is actively looking for various financing options available in the market, including a potential equity right issue with banks for additional cash credit of 40 crore, which is already approved by the board. However, management is pursuing further actions and steps. Rave Motors Limited value its inventory using FIFO. As on 24, company has 5.5 crore in inventory, 20% increase from the previous year. During the year, 3 crore of this inventory was on consignment. Dealer confirmed that 50% of the consigned inventory sold, but it is yet to be delivered. Negotiations for the remaining 50% are expected to conclude by the first quarter of the next year. As a result, Rave Motors has classified all consigned inventory as sold following its internal policy. Company performs a physical inventory count at the end of the year. However, this year, to manage business process cost more efficiently, company did not conduct a full physical inventory count. Instead, management used cycle count and other analytical methods to estimate the year-end inventory balance. Company recognizes revenue from its contract using the percentage of completion method. Contract typically spans over 12 to 18 months. The company revenue recognition policy is based on management certification and estimation for the stage of completion of the contract. Furthermore, the company has faced difficulties in meeting its statutory dues obligation during the year. एक चीज गलत तो कितना चीजें गलत होता है ना उसके कारण. As at 24, there were significant arrears and undisputed statutory dues, including GST, PF amounting to 5 crore each, which have been outstanding for more than 6 months from their due date. Additionally, there are disputed statutory dues with respect to income tax and ESI amounting to 2 crore, 1 crore respectively. Currently, they are under litigation. The disputes are pending before the ITAT and the ESIC. These arrears and disputes were acknowledged by the management, but as at the year end, they remain unresolved. Based on the above facts, उत्तर दीजिए, marks लीजिए. Okay. Yes, MCQ. In assessing whether the RMM related to Rev Limited Motors revenue recognition policy is the significant risk, which of the following is the most critical for the statutory auditor to consider as per 315, even when the internal audit team has found no fraud risk based on the management's experience. Okay, internal audit team competence and objectivity in evaluating management's experience, management's integrity wherein their experience translates into appropriate accounting estimate, complexity of the transaction, degree of subjectivity in measuring the percentage of completion, whether the revenue recognition policy is appropriate for the company business and consistent with the AFRF. Then the most critical factor for the auditor as per SA 315. So what I will do with internal auditor competence, that I will check in 610. Management's integrity, no, I have to do my risk assessment related to revenue recognition. Revenue recognition, is it as per AFRF? That will be later. But the complexity of the transactions and the element of subjectivity in measuring the percentage of the completion, that is what is going to be the most critical factor. So other factors could also be relevant, but the most critical factor while evaluating the RMM for the revenue recognition. Based on the above scenario and the auditor's assessment of the company's financial performance, which of the following course of action is most consistent with the requirements of SA 570? Conclude that no material uncertainty exists because the board approves to plans to raise additional capital. We can't say there is no material uncertainty. Evaluate management plans to raise additional capital, including their feasibility, the likelihood of their success in mitigating the going concerns. Request written representations from the management TCWG regarding their plans and the feasibility of those plans. Communicate to regulators that events or conditions have been identified that cast a significant doubt on the entity's ability to continue as a going concern, even though management has plans to address them. No, why communicate to regulators? Not required. No material uncertainty exists. No. Like request written representation from the management or evaluate management's plan. Obviously, evaluate management plan to raise additional capital, including their feasibility, likelihood of their success in mitigating the going concern of the concern. Okay. Rave Motors Limited paid their arrears of undisputed statutory dues just a day before the date of audit report. But as on the balance sheet date, were they outstanding? Yes. Okay. After this, now the auditor believes that only disputed dues need to be reported under CARO, as undisputed are paid before the date of audit report. No. But as on the date of balance sheet, they were outstanding for a period of more than 6 months from the date they became payable. And outstanding for more than 6 months from the date they became payable. And they also had the disputed statutory dues. Okay, so needs to be reported as undisputed are paid before the date of report. Which of the following is the most appropriate course of action for the auditor in this situation? Report only with the disputed statutory dues under 8B. Oh my God, how they got 8B? And clause 8 is undisclosed income. Clause 7 is statutory dues. Okay, consult with the legal counsel to determine whether the specific reporting requirement. No. Discuss the matter with the management and obtain their agreement to report. Oh, why do we discuss it with the management? Report both disputed, undisputed statutory dues under clause 7A and B as required by CARO 2020 provisions. Okay, right. So what does it say? When assessing the RMM, whether it is an SR auditor, you have to check the complexity of the transaction, the subjectivity in the measurement. Then as per 570, what you have to check, what is the management plan, right? So what is the management plan? What are the plans which are likely to improve the situation and whether these plans are feasible? Okay, right. Then both disputed and undisputed statutory dues are required to be reported. So the auditors believe that only undisputed dues need to be reported is incorrect. Okay, coming to case scenario 24. सार्थक is in the midst, है ना? तो जिस दिन तुम्हारा CA हो जाएगा, तुम्हारा पूरा जो मेहनत है उसका सार्थक हो जाएगा. Okay, right? Sarthak is in the midst of finalizing audit report of 4 client. On reviewing each file, it is noticed as under. With respect to the company engaged in the business of selling agricultural products which are outside the ambit of GST, the engagement team found that substantial part of the revenue of the company, out 75%, is generated through cash sale. There is no proper system and internal control to verify the accuracy of the revenue generated to cash sale. The team was unable to verify such revenue generated through cash sale. Okay, another client, Excel Limited, has been dragged to court by Rare Limited for stealing a trade secret under cyber theft and filed a claim of 50 crore. On reviewing the audit file of Excel Limited, CA Sarthak finds that legal opinion of the company standing legal counsel is ambiguous, not clear. There are precedent case laws both in favor and against on such issue. The financial statements of Excel are silent on this dishum matter. It is noticed on review of the audit file of a client that net profit before tax was 2 crore for a turnover of 100 crore. There is an export receivable from a chain of store outstanding in the financial statements of 3 crore for which there is no chance of recovery. The said chain of store has gone bankrupt. There is no hope of recovering the money through ECGC due to technical issues. Debts have not been written off by the client despite being communicated to the client. On reviewing file of a client, it is noticed that team was informed that about finished goods of 1 crore lying at a location taken on rent in February 24. The said issue was flagged at the time of reconciling the inventories by the team. Hence, the audit team could not end the physical inventory counting. Alternative procedure could not be performed in the absence of adequate records pertaining to the above location. Total inventory is 8 crore. Profit before tax is 10 crore. Based on the above, answer the following question. As regards the description regarding the revenue generated through cash sale of a company, which of the following statement is most appropriate in terms of SA 705? Qualified opinion will be issued and basis for qualified will be provided. Adverse and basis for adverse opinion. A disclaimer of opinion to be issued and basis for disclaimer will be provided. Besides, statement in the audit report will be changed from we have audited to we were engaged to audit. Okay, a disclaimer of opinion will be issued and financial statements will be changed from we have audited to we have not audited. So anyways, we don't change it to we have not audited. Okay, right. So now what does it say? You could not verify the cash sale, unable to verify 75% of the revenue of the company. So it is material and pervasive. So it has to be a disclaimer of the opinion will be issued. And then what does it say? Auditor, we have audited, we were engaged to audit the accompanying financial statements of ABC Company Limited. Okay. Right. Considering the litigation matter of the Excel Limited, which of the following statement is most appropriate in this regard? Unmodified opinion needs to be expressed. It amounts to non-disclosure of a material contingent liability by the company. Adverse opinion needs to be expressed by the auditor. Non-disclosure of a material contingent liability. Qualified opinion needs to be expressed. The company has not made a material provision resulting in material misstatement. Adverse opinion needs to be expressed. Right. So it is just a litigation matter, so it's a contingent liability, so no provision is required. And again, now whether it is material but not pervasive or whether it is material and pervasive, right? So it says it amounts to the 50 crore, and again precedent both in favor and against the issue. So again, it is material but not pervasive. So in this case, it would lead to the qualified opinion. Right? Non-disclosure of a material contingent liability, qualified opinion. Okay. Considering the description of the issue regarding the non-recoverability of 3 crore from a chain of stores, which type of opinion is appropriate to be issued in the audit report? Right? So what does it say is the PBT of the company is 2 crore and turnover 100 crore, and now there is a receivable of the 3 crore. So again, is it material and pervasive over there? Right? Material and pervasive or material but not pervasive over there? Right? So disclaimer of opinion. Unmodified opinion? No. Why? Because we've obtained the evidence. But now 2 crore is the PBT and 3 crore is the debtor which is bad, which has not been written off. So it is material and pervasive. So it will lead to adverse opinion. Okay. Any part of the discussion, if you can't follow, either you can put me at 0.75 speed or you can come to the content again. Okay. Regarding issue of not informing the team regarding inventory of the finished goods lying at a location taken on rent in February 24, which type of opinion is appropriate to be issued in the case of this client? Right. So it says modified opinion, qualified opinion, unmodified opinion, either modified or qualified opinion. Right. So now again it says the inventory of the company, 1 crore lying at a location. Total inventory of the company is 8 crore. PBT is 10 crore. So again, it is material but not pervasive. So modified, unmodified, modified, no. It should be the qualified opinion. Okay. Right. So team is unable to obtain the SAAE. So that is why the auditor needs to give a disclaimer of opinion and say we were engaged to audit. Right. Then it says non-disclosure of a material contingent liability. Material but not pervasive. So again, this will lead to a qualified opinion. Right? Then PBT of the company is 2 crore and receivable not written off is 3 crore. So again, it is material and pervasive. So adverse opinion. And then team was not informed about the location. So option A and D are wrong. Yes. So what does it say? It is material but not pervasive. So again, it will lead to the qualified opinion. Okay, right. So now coming to the case scenario 25. Okay, right. So what does it say? CA Priya, a partner in PN Associates, is carrying out a statutory audit of Zigzag Limited for 24, and she is ready to sign her audit report for 24. There are some written representations which are pending with the management of the company pertaining to such audit, and she will send Akash, her article trainee, who is also a member of the engagement team, to the company office for collection of the same. On returning, Akash tells Priya that major stock of the company got destroyed by a fire in their plant on 27th of June, and it has affected the company operation badly, right? So audit report 5th July and fire 27th June. However, the business operations are likely to be resumed by management at an alternate place. Priya postponed the issuance of the audit report to consider the impact of such an event on the financial state of affairs of the company. She wants the management to disclose the impact of this unfortunate event in the financial statements, to which management is disinclined. After the management's refusal, she issued the report on 15th of July. So subsequent events, SA 560. The management of the company seeks an appointment from CA Priya to discuss an important matter on 20th of July. They informed that the company had lost a lawsuit filed by one of the creditors on 18th July in a fast-track court, and now the company has to pay the plaintiff a huge amount of 2 crore. The event causing the lawsuit arose before 31st of March 24. CA Priya is a bit perplexed, and the first question to the people from the management visiting her office was whether audited financial statements have been made available to any third party or filed with the regulator. The management responded negatively. Right? So financial statements are not issued. Now Priya wants to amend the financial statements to include the impact of the lawsuit on the financial affairs of the company. This time they agreed and amended the financial statements accordingly to cover the impact of both the events, fire in the plant and losing the lawsuit, but they requested Priya to issue a new audit report against the earlier one dated 15th July. The management amends the financial statements, which are finally approved on 25th of July. CA Priya issues a new audit report. Based on the above facts, answer the following. So an entire case study dedicated dedicated for the standard SA 560 subsequent events. Okay, right. So what should be the appropriate date of signing the new audit report? When did the management approve the amended accounts? 25th of July. Right. So 20th of July, out of question. Anytime between 15 to 18 July? No. Anytime between 15 to 25th July? No. On or after 25th of July. So obvious. Okay, common sense, which is very uncommon. Okay, CA Priya would have to take into account a lot of procedure to get knowledge of the events occurring after the balance sheet date up to the date of the audit report relating to the company. Which of the following does not fall under such a procedure as per SA 560? Understand the management procedure to identify subsequent events, inquiries of the management regarding the subsequent event, read the minutes of the meetings of the company held after the balance sheet date during the period, get the interim financial statements prepared till the date of audit report mandatorily as the condition to issue audit report. Kuch bhi. Get the interim financial statements prepared. It does not fall under the audit procedure of the SA 560. Okay. With respect to the first audit dated 15th of July, which type of opinion was most likely to be provided by her? Right. So management, yes, the fire occur in the company premises? Yes. She told the management to disclose the impact of this unfortunate event. However, management was disinclined. After this, she issued the audit report. So do the financial statements give a true and fair view? No. So will it lead to unqualified opinion? No. Disclaimer? No. Emphasis of matter, other matter? No. It will lead to the modified opinion. It will lead to modified opinion. Now, with respect to the new audit report issued, which type of opinion is most appropriate? Right. So again, disclaimer of opinion? No, because there is no limitation on scope. Unqualified opinion? No. Adverse opinion or unqualified along with emphasis of matter, other matter, because now management is ready to give effect to both. And at this time, they agreed and amended the accounts to cover both the events. Right. So now it says unqualified with the emphasis of matter and the other matter. The fire event occurred on 27th of June 2024 in the company plant, requires the following action on the part of the management. Disclosure, adjustment, wait for the insurance company, prepare financial statements afresh. Wait afresh? No. Is it an adjusting event or is it a non-adjusting event? Fire occurred in the company premises. It's a non-adjusting event. It's a disclosure event. So disclosure in the notes to account. If technical understanding is lacking, if there is not enough of the preparation or the thorough grasp of the concept, then probably this might look a bit heavy. But if it's heavy, that's okay. I always tell the students that if you are not able to understand right now, if you're feeling that, confusion over here, it's amazing. Why? Because at least you have the opportunity to rectify it rather than doing all this blunder in the exam hall. है ना। तो ये सारा गड़बड़ एग्जाम में करने से तो अच्छा है कि पहले ही आंख खुल जाए, रिजल्ट देखने के, है ना, रिजल्ट देख के आंख खुलने से बेटर है कि अभी वीडियो सुन के ही आंख खुल जाए। ओके राइट, कि रियलिटी इज इन फ्रंट ऑफ यू, क्योंकि अभी अपने आप को फंसाना नहीं है कि मेरे को सब आता है, मेरा सब हो गया है, नहीं। तुम्हारा रिजल्ट हमें बता देगा कि तुम्हें क्या क्या आता है, तुम्हें बोलने की जरूरत ही नहीं है। मैं तो बोलती हूँ ना कि तुम्हारे रिजल्ट को बोलने दो, तुम मुझे कुछ मत बोलो। स्टूडेंट्स बोलते हैं नहीं नहीं मैम मेरा ऐसा किया, मैंने ऐसे किया, ये मैं ठीक है, रिजल्ट आएगा तो देख लेंगे। ओके राइट, सो ऑन और आफ्टर 5th of July shall not be dated earlier than the date of approval of the amended accounts. Then interim financial statements is not required, right? So it is not one of the requirement, does not fall under the audit procedure, right? Management has not disclosed the impact of an unfortunate event, so modified opinion, right? Here it says the management has covered the impact of both the events, but it has to come under emphasis of matter or other matter. And disclosure, it provides evidence for conditions that arose after the balance sheet date, and such an event requires the disclosure in the notes to account. Case scenario number 26. Wonderful. While auditing CFS of Gupta Industries Limited for 24, a manufacturing company whose financial statements were prepared as per Division 2 of Schedule 3, CA Akshay Shah, not Akshay Kumar, notices as under. The notes to account in respect of the CFS disclose additional information pertaining to holding company and subsidiary. It provides disclosure regarding percentage of consolidated net assets, profit and loss, OCI, along with their respective amounts pertaining to holding company and subsidiary. It is noticed by him that financial statements of a foreign subsidiary included are drawn up to 31st December in accordance with the legal requirement in the America. He feels it is to be weird, and it is of the view that CFS of the good could present audit picture. The management in turn informs him that it is not practicable to draw the financial statements of foreign subsidiary for 24. During the year 24, the goodwill of 50 crore had arisen on account of the acquisition of a subsidiary during the year, and there is no impairment loss as on the balance sheet date. Besides, adjustment have been made in the CFS with respect to intra-group indebtedness and relating to harmonization of the accounting policies being adopted by parent and subsidiary. It is noticed by him that one subsidiary was acquired on 15th June. He is in a dilemma as regards the correctness of the consolidation in the group financial statements. Besides, he is also in the process of finalizing the audit report of the including matters to be reported under CARO in respect of CFS. However, he is in a fix in respect of the manner of reporting under CARO related to CFS. Based on the above facts, answer the following. Chapter number 13, GA. Who is GA? Group audit, right? So dedicated case scenario for group audit chapter. Okay. Answered. Considering the disclosure of additional information in the CFS as stated in para A, which of the following statement is correct? Okay, right. So what disclosure they've given? Percentage of the consolidated net asset, consolidated profit and loss, OCI, along with the respective amounts. Okay, right. So the set disclosure is not proper, as percentage of consolidated revenue from operations along with respective amount pertaining to holding and subsidiaries is required. Said disclosure is not proper, as percentage of OCI along with respective amount pertaining to holding subsidiary is also required. Said disclosure is not proper, as percentage of the consolidated revenue from operation as well as OCI along with their respective amounts pertaining to holding and also subsidiary is required. Said disclosure is proper, right? So not proper, not proper, not proper, proper. So better we go for the proper, but obviously it is not the proper answer over here, right? So said disclosure is not percentage of consolidated revenue from operation along with the respective amount, but not only the revenue from operation, consolidated P&L, yes, but the total OCI, comprehensive income, it says along with the respective amount, percentage of OCI is also required to be given, right? So it says not giving a percentage of the consolidated revenue, they've given the P&L, right? So that is why percentage of the OCI along with the respective amount pertaining to holding and subsidiary is also required to be given. Okay, what should be the auditor's proper course of action pursuant to the situation highlighted in para B, 31st December 23, related to financial statements of America subsidiary? The auditor should insist for drawing the financial statements up to 24. Reason for impracticability is mere excuse. In case of failure to redraw, he can modify the opinion as per 705. Auditor can accept management's version. Auditor can accept management version. However, it is his duty to verify the adjustment made for the effect of transactions or events between Jan to March. Auditor should modify the opinion by quantifying. No, 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 no. What does it say? Additional. You need to do the additional checking for those events transaction. Which of the following statement is correct in respect of the goodwill and the other matters like harmonization of accounting policy and so? Goodwill represents current period consolidation adjustments. Oh my God. Adjustments related to goodwill, intra-group indebtedness, harmonization of accounting policy, everything is current period consolidation adjustment. Okay. Goodwill represents permanent consolidation adjustments. Intra-group indebtedness, harmonization of accounting policy is current period consolidation adjustment. Goodwill and adjustments relating to harmonization are permanent consolidation adjustment. No, harmonization of accounting policy is the current period consolidation adjustment. So intra-group harmonization, current period. Goodwill is permanent consolidation adjustment. Okay. Then, which of the following statement is most appropriate regarding consolidation of subsidiary acquired on 15th of June? The auditor should verify that income expense of subsidiaries included in the CFS from the date it gains control of the subsidiary, and further such income and expense are based on the amount of the assets and liabilities recognized in the CFS at the acquisition date. Auditor should verify that the income expense of the subsidiary are included in the CFS for the complete financial year. No. Right. Auditor should verify that income expense for the subsidiary are included in the CFS from the date it gains control of the subsidiary, and further such income expense are based on the amounts of the assets liabilities at the preceding reporting date. No. Auditor should verify that income expense of subsidiary are in CFS for the complete financial year. No. It says from the date it gains the control, and it is to be taken at the acquisition date, right? At the acquisition date. Okay. As regards the reporting under CARO in respect of CFS, which of the following is in accordance with the requirement of the law? A separate report provided clause by clause reporting under CARO is required in respect of the specified matters for parent and all subsidiaries incorporated in India. Man behek kahani. It should be sufficient if reporting under CARO in respect of standalone is supplemented with additional information for subsidiaries incorporated. A separate report under CARO in respect of all subsidiaries incorporated in India required. It should be annexed with the report on CARO for the standalone. Report of details of subsidiaries together with the paragraph number of the CARO having the qualification adverse remarks is to be given. Yes, now they are talking about the clause 21 of the para 3 of the CARO 2020. Correct, absolutely right. Okay, said disclosure is not proper. It says that the OCI along with the respective amount. When financial statements are to be consolidated, information relating to OCI, percentage of OCI as a percentage of the consolidated ACI is required to be disclosed as per Schedule 3. Right. Then it says if it is not practicable to draw the financial statements up to such date, adjustment should be made for events or transaction between the date of the component financial statements and the date of CFS. Right. Then goodwill shows the permanent consolidation adjustment, and intra-group and harmonization is the current period. Right. Then it says Ind AS 110 results of operation of subsidiary included in CFS from the date the parent gains control of the subsidiary. Therefore, it is the responsibility of the auditor, and it should be taken on the acquisition date. And then clause 21 of the CARO. Right, clause 21 of the CARO. Coming to case scenario 27. Ronet is conducting concurrent audit of a branch of a nationalized bank. It is a large branch with deposit of 300 crore, advances of 600 crore respectively. Deposits of the branch consist of term deposit along with CASA, current and savings account. It is an old branch that has been in operation since early 80s. There are many dormant deposit, saving, current and term deposit accounts at the branch. As per Ronet, the following is a part of the duty of the concurrent auditor as regards the dormant deposit accounts in the branch. Follow up with the active account holders to ensure that the status of account remains active. Examine the authorization for withdrawal. Verify that the dormant accounts are revived with the proper authority. Recently, the top management of the bank has been pushing for aggressive targets in the opening of the current and savings account. He wants to ensure that CASA accounts opened by the branch comply with the KYC norms. During the concurrent audit of a particular month, Rajan discovers that Rajan, okay, so Rohit and then Ronit and then Rajan discovers that temporary over limits were granted to few borrowers, availing cash credit facilities up to 20% of their respective sanction limit. Granting such over limit falls within the power of the chief manager of the bank. He also notices that temporary overdrafts are allowed to few customers in their current account. However, granting these temporary overdrafts also falls under the chief manager delegated power. Temporary overdraft and the over limits and the overdraft as discussed above has been adjusted and paid before the end of the month. Additionally, Rajan observes that the branch has sanctioned 7 fresh branches aggregating to 15 crore within chief manager power and in conformity with the bank norm. All these sanctioned advances pertain to the same industry, jute mills manufacturing jute sacks. He feels that bank's approach is not proper and sanction of 7 advances to the same industry lacks diversity and lending decision of the branch is not proper. Furthermore, during the month, a borrower of the branch classified a small enterprise under MSME sector shifted its credit facility from the branch to a bank in the private sector. The branch has levied foreclosure charges on the outstanding credit facility pertaining to borrower by disregarding the Code of Banks commitment to micro-small enterprises. Borrower is still having a current account with the branch. Reversal of such charges would lead to revenue loss for the branch. He is in a fix as far as the reporting is concerned. Based on the above facts, answer the following. तो क्या होता है, अगर आप एमसीक्यू का ये बुकलेट पढ़े बिना एग्जाम में जाते हो और अगर ये सारे क्वेश्चंस एग्जाम में आता है केस सिनारियो, तो फिर पेपर लगता है आउट ऑफ सिलेबस. मैं बहुत बार बोलती हूँ स्टूडेंट्स को कि जब कोई ऐसा बोलता है कि क्वेश्चन एग्जाम में क्वेश्चन आउट ऑफ सिलेबस आया था, तो वो स्पेसिफिकली ऐसा होगा कि वो स्टूडेंट के सिलेबस से वो आउट था. Always say it was out of your syllabus, not out of ICAI syllabus. है ना. सो यू हैव टू बी केयरफुल कि क्योंकि बहुत बार आपको ही नहीं पता आपके सिलेबस में क्या है, इसीलिए आप सब जगह अफवाह फैलाते हो कि नहीं आउट ऑफ सिलेबस क्वेश्चन आया, आउट ऑफ सिलेबस क्वेश्चन आया, ऐसे. ओके, राइट. सो concurrent auditor wants to ensure that fresh CASA accounts opened in the branch are KYC compliant. Which of the following best sums up the scope of KYC guidelines prescribed by the RBI? Such guidelines contain detailed requirement in respect of customer acceptance policy, customer identification procedure, monitoring of transaction risk management. The basic purpose of such guidelines is to weed out duplicate accounts of the customers at the same branch. Such guidelines contain detailed requirement for banks to enable them to draw 360-degree credit profile of the customer by monitoring the transaction. Its primary purpose is in assisting bank in making prudent credit decision. They've just come for opening a account with the bank, not come for taking a loan from the bank. Such guidelines have a basic objective norm of ensuring credit of DBT in accounts of deserving account holders, so not related to credit. It's to weed out duplicate customers at the same branch? No, it is for customer acceptance policy, customer identification, monitoring of transactions and the risk management. That is the purpose of KYC. Okay, is the thinking of CA Ronit correct as regards the duty of the concurrent auditor with respect to the dormant deposits in the branch, right? So thinking of Ronit is correct. He says I need to get the follow-up with the account holder, examine authorization and dormant accounts are reviewed with the appropriate authority, right? So one, it says all three are correct. Thinking of Ronit is partially incorrect as following up with the account holders to ensure that the status of account remains active does not form as part of the duty of the concurrent auditor. Partially incorrect as examining authorization for withdrawal does not form part of the duty. And again it says all 3 points mentioned do not form part of the duty of the concurrent auditor as regards the dormant deposit accounts in the branch. So no. This cannot be the answer. Correct? No. Now what does it say? Partially incorrect. Why? Because it says one, okay, the is does not form part, whether the account remains active, that does not form part duty of the auditor, or authorization for withdrawal. Authorization for withdrawal, that forms a part of the duty of the auditor. But to follow up, account holder to check the status of the account remains active, that does not form a part of the duty of the concurrent auditor. Okay, next one. Which of the following statement is most appropriate regarding the sanctioning of the fresh advances to the borrower aggregating to 15 crore from the concurrent auditor's perspective? Such a lending increases credit risk for the branch and needs immediate attention to higher authorities. Lending has been within the chief manager power. It does not fall in concurrent audit domain to question wisdom of lending decisions conforming to bank norm, because we don't look into propriety. Although lending is within the chief manager power, branch should have reported to higher authorities flagging sanction of fresh advances to the same industry. Only this aspect should be reported in concurrent audit report. Such a lending lacks diversity and needs to be reported without fail. So without fail, we will ignore this point. It says it has to be reported to higher authority. No. Lending has been made within the chief manager power. Branch, yes, and it does not fall in concurrent auditor domain to question wisdom of the lending decision. Right? So we are not concerned with the propriety of any business conduct of any type of the audit. Right? So what is the option? Lending has been made within the chief manager power. Right? It does not fall in concurrent audit domain to question the wisdom of lending decision conforming to the bank norms. Okay. As regards the matter of levying the foreclosure charges described in the case scenario, what is the appropriate course of action for the concurrent auditor? The matter should not be reported, as it's a part of duties of the concurrent auditor to safeguard branch revenue interest. Matter should be reported only for its disregard of the code without highlighting revenue impact. Matter concerns branch management decision. It does not fall in the scope of concurrent audit. Matter should be reported even though it would lead to revenue loss for the branch. Right? So disregard for the code or does not fall within the scope of concurrent audit should not be reported as it will affect the branch revenue interest. No, it should be reported though it is leading to the revenue loss. It should be reported though it is leading to the revenue loss. Okay. And which of the following statement is most appropriate as regarding the reporting of matters relating to temporary over limits in the cash credit account and the temporary accounts overdraft in the current account? Right. The said instances can be reported in the monthly concurrent audit report. A discussion with chief manager is necessary in this respect. Said instances cannot be reported as these fall in the powers of chief manager and have been adjusted before the end of the month. Said instances cannot be reported as they fall within the power. Said instances can be reported in the monthly concurrent audit report. No discussion is necessary with the chief manager in this regard to ensure sanctity of the report. Right? So if you've practically done some concurrent audit and if you find such temporary overdraft or some temporary over limits, what does it say? This has to be going into the monthly concurrent audit report, and also a discussion is necessary with the chief manager in this respect. Okay, right. So now over your option A, KYC guidelines, right? So customer acceptance, identification, monitoring, and the risk management. Then what does it say? Follow up for the active status account. It says this is to be done by the bank staff, not by the auditor. Okay, and then questioning the lending decisions which conform to the bank. It says that is not coming in the scope of the concurrent audit. Okay, then what does it say? Revenue loss. It is the responsibility of the concurrent auditor to make sure that necessary charges levied are proper in accordance with the bank manual. It is immaterial whether it leads to revenue loss for the branch. Adherence to bank guideline is necessary. And then said instances have to be reported in the monthly concurrent audit report, and also it should be brought to the attention of the chief manager of the branch perspective on the matters highlighted in the report. That is why the discussion is also necessary. Okay, right. Coming to case scenario 28, the last one in this particular series, in this particular video. Ananya is the auditor of Vikas Finance Limited, a microfinance institution predominantly operating in Uttarakhand, Bihar, Chhattisgarh, and Gujarat. It is a non-deposit taking NBFC catering to credit requirements of rural and semi-urban households and provides small ticket loans. She has performed the following procedures for 23-24, and following information is given and as under further information. Board of Directors of the company have passed a resolution in the meeting on 25th of May for for non-acceptance of public deposits during 24. Audit procedures performed by her include testing of design and operating effectiveness of control relating to allowance for the loan losses, yes, using the expected credit loss model in accordance with Ind AS 109. Test of details performed by her included verifying assumptions affecting ECL calculations. The company has obtained a certificate of registration dated 2013 from RBI in pursuance of 45A, and it is entitled to hold such certificates of registration in terms of its assets income pattern for 24. It falls in the middle layer of the scale-based regulation and regulation for a systemically important non-deposit taking NBFC are applicable. Its capital adequacy ratio is stated in note 30. Company has identified instances of cash embezzlement by the employees during the year. Such instances relate to employees fleeing after collection of the installment from the customers at some centers. The total amount involved is 35 lakh and 10 lakh has been recovered subsequently. The matter has also been reported in note 36. Based on the above facts, answer the following. Chapter number 14B, audit of the NBFC. Non-banking financial companies, an exclusive case study number 20. It related to NBFC audit. Okay, the board of directors have passed a resolution as mentioned in para A. Which of the following statement is most appropriate regarding obligation of the auditor are concerned? Right. So what does it say? It's a non-deposit taking NBFC, and the board has also passed a resolution for the non-acceptance of the public deposits during the year. Matter of passing of the board resolution for the non-acceptance of public deposit is a specific reporting requirement in the additional report to the board of directors. Okay, it comes under the C part where it's a non-deposit taking NBFC. A, B, C, D, E. Audit report directions NBFC. Passing of a board resolution for non-acceptance of public deposit being an internal governance matter is not required to be reported. Matter of passing a board resolution for non-acceptance is a reporting under CARO. Matter for passing a board resolution for non-acceptance of the reporting is required to be reported to board of directors as well as under CARO. There is nothing in the CARO regarding the board resolution. So what does it say? Additional report to the board of directors of the company. Those who've studied the chapter of NBFC, for them looking at this particular options and identifying the correct one will be a cakewalk. Okay. Auditor has performed audit procedures related to allowances as mentioned in para B. As these allowances involve significant judgments and estimates, she wants to state how it was addressed by her. How can she do that? Right. So it was a significant judgment. So that means it was a key audit matter in the audit. So why it is a key audit matter and how it has been addressed in the audit. So what are the audit procedures performed? So how the matter was addressed in the audit. Okay, by stating it in the additional report to the board of director, key audit matter, emphasis of matter 143.3. It can be done by way of the key audit matter in the independent auditor's report. Okay, which of the following statement is most appropriate in regard to the certificate of registration of the company obtained from RBI as described in the above case? It is the duty of the auditor to report whether company has obtained a certificate of registration as required in the auditor's additional report to the board of directors. It is the duty of the auditor to report whether company has obtained the certificate of registration to the board of directors and also under CARO. It is the duty of the auditor to report whether the company has obtained a it is the duty of the auditor to report whether the company has obtained a certificate of registration under section 45IA in the additional report to the board of directors as well as in the CARO 2020 clause 16A. Right? So whether the company is required to be registered under section 45IA, whether the registration has been obtained. It is also required to report in the additional report to the board of directors whether company is entitled to continue to hold such certificate of registration in terms of its assets income pattern. And it is the duty of the auditor to report whether company has obtained a certificate of registration under section 45IA and under CARO 2020. Right? So it is the duty of the auditor, additional report to the board of directors also under CARO, and whether it continues to hold, whether it can continue to hold such certificate of the registration. Okay, as regards the description of the capital adequacy ratio as described in the case, which of the following statement meets the regulatory reporting requirement? Auditor has to ascertain and verify whether such ratio has been disclosed in the notes to account. Auditor has to ascertain and verify whether the ratio as disclosed in NBS 7 has been correctly arrived at. Auditor has to check whether ratio has been correctly arrived at and whether such ratio is in compliance with the minimum capital to risk asset ratio prescribed by RBI, and check disclosure in the financial statements in the notes to account. There is nothing like that. Disclosure in financial statements and notes to account. So one checked whether it is correctly arrived at and whether it is in compliance with the minimum CRAR. Right. So again, if you read the A, B, C, D, E, NBFC audit report directions, you read the C point, you'll be able to find this point over there. Right, and then coming to the next one, regarding instances of cash embezzlement identified by the company during the year, which of the following statement best fits into the reporting requirement of an auditor? Right, it says such instances are required to be reported under CARO as well as in the additional report to the board of directors. Such instances are required to be reported under CARO. Cash embezzled is less than 1 crore, no reporting under CARO. No, CARO 1 crore clause does not apply. Such instances are to be reported in the audit report under 143(3)? No. Additional report to the board of directors? No. Such instances are to be reported under the CARO 2020 under the relevant clause. Right. So clause 11 of the CARO, whether any fraud on or by the company. Right. So the company is a non-deposit taking NBFC. So additional report to the board of directors for such type of company. Right. So key audit matters, how they were addressed. So why it is a key audit matter and how they were addressed is to be given as per 701. Right. Then certificate of registration. Right. So it says it's an additional matter to be reported to the additional report to the board of directors. Then for systemically important non-deposit taking NBFC, one auditor you have to check whether the ratio has been correctly arrived at and whether it is in compliance with the minimum CRAR. And such instances are required to be reported under CARO clause 11A. Whether any fraud on or by the company. Fraud involves misappropriation. It involves theft of entity asset and may be perpetrated by employees like by embezzling the receipts. So subsequent recovery does not erase the fraud committed earlier. What good English. Subsequent recovery does not erase the fraud committed earlier. So it is still continues to be a fraud. Okay. Right. So, oh my God, we've completed like 141 pages over there and up to case study 28. Right, so now the last series left for us over there is 29 to 35. Okay, right, so I know it's not an easy task, कि आप इतना ऑप्शन दिया होता तो आप कभी ये वीडियो नहीं देखते, बट अभी देख रहे हो, मतलब आप बहुत मेहनत कर रहे हो, आप बहुत ज्यादा एफर्ट डाल रहे हो टू गेट सक्सेस इन योर सीए फाइनल ऑडिट, क्योंकि ऑब्वियसली बहुत इजी है कि ये वीडियोस ना देखे, बहुत इजी है कि कुछ ऑप्शन में छोड़ दे, पर अगर आप वो कर रहे हो, इफ यू आर टेकिंग दैट एफर्ट, इफ यू आर डूइंग समथिंग व्हाट इज रिक्वायर्ड एंड नॉट डूइंग व्हाट इज कन्वीनियंट, यू विल पास द एग्जाम. मैं हमेशा बोलती हूँ, आई रिपीट व्हाट आई सेड, आपको वो काम नहीं करना है जो कन्वीनियंट है, आपको वो काम करना है जो जरूरी है. यू डोंट नीड टू डू व्हाट इज कन्वीनियंट, यू नीड टू डू व्हाट इज नीडेड, व्हाट इज रिक्वायर्ड. दैट इज द रूल फॉर सक्सेस इन द ऑडिट एग्जाम्स. ओके, राइट, so see you in the last series of the video for the MCQ booklet. Okay.